Hey, what's going on, everybody? We are back. It's your boy MC Fire. We're coming at you with another Fireside Trade Weekly video. We definitely need to cover what the potential plays are for the week and let you guys know what's going to be happening here in the near future. Um, Politically, there's a lot of things going on, and financially, there's a ton of things that are actually transpiring coming here in the near future. You got the CME, and we're watching that pretty closely, and other potential plays that could be potentially setting up. So let's dive right in. Out the gate, we have our we're going to bring up the bar chart just to kind of show you the sector rotation that's out there. So as you can see here recently, that the telecom sector and the info and tech kind of spurred on a sell, which bled into the SPY. So SPY was showing actually relative strength. Guess where my cursor is. But as we move on, SPY has kind of picked up the program. The rest of the market has kind of got with the program over this last period. That is to say that this might continue for a little bit, as the market might potentially see this as a sell setup there. So let's see here. I want to see if my mic is because I can't tell if the mic is bad. So we'll bring that off screen here. But yeah, so we've got a couple things working. I'll go ahead and bring up the also the CME Fed Watch tool while I'm fiddling with this. You guys can see this. So there is definitely a chance that the Fed could cut rates early, but I guess the general consensus is that they won't do that. There, there's a 97.4% chance that it will remain at five and a quarter to five and a half, and that's not necessarily a bad thing. What I would say what is bad is the Fed saying that they how can I put it? The Fed saying that they basically would cut three rates for the year. You could potentially cut rates three times for this year, and then not cutting once. So that is kind of a concern. But more importantly, what is more important is they could potentially cut to five and five and a quarter in the September meeting. For me and Key, that's really good. As we continue on our financial journey, paying off debts is important, and we'll be paying off all of our consumer debts right around that time. So we don't have any real household debt. That's one of the cool things about us downsizing when we did. But paying off those debts is pretty sweet. So on the forex, moving right along the forex factory calendar, all this stuff is free, guys. So all you gotta do is go to forex factory calendar, and it just comes right up, and you can kind of see what are the flashpoints moving throughout the week, and days to watch out for economic drops of news and of certain reports that affect the market. CME Fed Watch tool, and again, the stock market and sector performance, all that stuff is free, and it just gives you a nice juicy snapshot of the market. You can just go online and pull that stuff right up. So we're gonna focus really just on the red. So nothing really going on Monday. Couple European releases, and then for the U.S. again, nothing really red until you get to Wednesday. You got manufacturing PMI, just basically the manufacturing data of, hey, are we able to hit numbers, hit quota, are things like getting more efficient or less efficient? And then Thursday, unemployment claims. So those economic reports kind of come out like every 2 weeks or so. We almost have one every week. But unemployment claims is going to be a big one. It's going to tell, hey, is the market relatively strong or weak relative to the last quarter, right? And then core PCE is coming up on Friday. So just something to be watch out for. What that really means to us, that's not necessarily a trigger to take or not take a trade, but that's more of a understanding or trigger to know that there could be increased volatility and actually avoid. If you're a trader, avoid trading days like that. If you're like a longer term trader, maybe like a month or a leap, these things are just par for the course. But if you're a day trader and you're looking for a certain edge and volatility, then your edge might be affected, yay or nay, by this increased volatility. I know if you're an options trader, you might like trading on days like this, but it doesn't necessarily give you an edge because you don't know what the report's going to be until it drops. So that's just something to take in there. So straight to the charts here, we wanted to kind of dive into the charts. Before we kind of get to the charts, let's kind of go back. Let's kind of go back to this. Close that real quick. Let's go back to this real quick. What something I did want to know is, if you notice, right, while the market's pushing back, which sectors are potentially seeing a rise in activity. So I love doing this because it just shows you that even though there's things pulling back, you get a first-hand look of what might bounce first. And I believe it's your healthcare sector. So that's one of the reasons why I really like looking at the bar charts, is because you know off the gate what potentially could react to the market first, right? What could be actually moving in a direction that's not exactly the teams of the market, who's standing out there. So that's another thing I want to know. This bar chart is really good for. And if everything is doom and gloom, then you could say out the gate, the healthcare sector is potentially might see a reaction first. It might be due to some fundamental or some news, or rotation out of the more riskier items and into the more safe items. You could see like consumer staples and like healthcare as some of the more safer items. People are gonna, when they need those things, they need those things, and even if the price rises a little bit, they're not going to be willing to cut costs on some of those things. So we'll dive in this quickly because the market will be starting here in about 25 seconds. But we're gonna do our weekly recap and then we'll dive into the market. So the first thing I wanted to know was, you've got your boy Meta, right? Meta's been hit pretty hard over the last 2 weeks, kind of dropping from all-time highs to finding some support at 455.83. It looks to be, it's probably going to drop a little bit more from where it is. It gapped up a little bit more from where it is. So that was kind of the point, is if Meta can break this level, you could see some significant rallying. And we'll kind of break down what this is and what me and Q have actually been working on. So we were kind of hinting on the last video of a indicator that helps us find our vol on the day. And what we found is, if looking back, is that it's really good for determining the end and kind of beginning parts of a move, or seeing where people are really stepping in. So it's just good to know where big money step in, or relative to normal increased volume, and it'll highlight the colors. So right here at the end of this move, you see a colored in candle. The candles that are not colored in, those are pretty standard for the average volume, which you would expect to see on the chart. But on the days where there's increasingly higher volume, then that would be colored in, and the color would correspond to how aggressive or how over the relative volume that it was. So if it was like 1.3, it would be typically a lighter shade of red or green, depending on its direction. And if it was a darker green or red, then it would be a higher volume relative to what it normally is in red or green direction. So it's just a good way for us to kind of get a bigger heads up. And as you can see, let's say for example, this red candle here We have it as a big sell, but already these sellers higher than normal, like 30% of these sellers are offsides on this side. So, and then the follow-on candle was a highlighted green. So these sellers weren't able to get paid, and that could spur on a rally. It's pretty cool to know that's happening. It also kind of starts a move. So as you can see, sellers here stepped in, and then you would think, okay, these guys might get faked out, but as it starts to continue to break, you're like, okay, no, selling actually does follow through here. So and it falls through the next day, followed on by increase, like a very dark green candles, spurring on a lot of buying. So just knowing that and having some pullback into that area, you can get a nice juicy risk to reward on the day. Say, okay, well, there was a large day here. Stop out at the low, buy here because there's a third higher volume than normal on that day. So a lot more people or institutions have stepped in. It's not just robots in there buying. There's real buyers there. There's real volume there. Something's happened, and when other people get off sides or they get trapped, or you see the start of a move, that can spur on a really big move, and that's exactly what happened here. Increased buying, kind of follow through. It did pull back a little bit, but the stop out would have been here, and you would have been in for a nice juicy ride. That's kind of the same thing that's happening right here. These sellers are kind of off sides, so with it gapping up like this into this area, even today, Meta would be necessarily a aggressive buy, but as it gets above the 8 period moving average, you can almost say, well, you could be a little aggressive, maybe with the position. I mean, not with the position, but maybe aggressive on your buy action. So doesn't have a full complete setup on, let's say, the weekly, but it is a little aggressive on the day, and you can maybe throw money at it if you feel convicted to. This is by no means financial advice. You do what you want with your money, but I would say I like this. I like this as a way to kind of pinpoint that. And the same thing here for Bitcoin. So we see it kind of drop very drastically. You don't know where the bottom is. Yes, you understand that this is where selling came in. Selling came into this support level and then bounced out of that. But how do you know that it's going to do it, or how do you have an inkling that it might do it again, right? So if we go back and look, right, same thing kind of happened here. Larger than normal volume pushed, but these sellers weren't necessarily rewarded for their efforts, and it rallied, and then you get an exhaustion candle there. Same thing here as it sold and gap down, it increased buying pressure, followed on by some selling pressure, but these guys got off sides and then it rallied against them. So this would have been a very nice risk to reward, been very tight within a day. If you're a swing trader, I think this would be absolutely perfect for you. If you're looking for those nice juicy swings, maybe back to the 8 period moving average, it has a pretty high degree of success there that we've seen in just our immediate back testing. So with Bitcoin, we wanted to kind of point that, yeah, that rally, it was spurred on because of this aspect right here. And this green candle right here could be the exhaustion candle. It's at 3 ATR with an increased amount of volume here. But what if you notice on the weekly, right, you recently just, well, this previous week was a buy trigger for Bitcoin. So I know a lot of people saying it's increased volatility, and these swing highs, the swing lows, like a lot for especially the price that you're getting for Bitcoin. But in my humble opinion, I think Bitcoin being a household name and people kind of rallying behind Bitcoin and Ethereum, looking as bad news, you just want to know, is there an opportunity there for a better risk to reward on the daily, even as opposed to the weekly? So speaking of which, opportunities, AVGO. So this is one that we took a little bit of a position on, only because we realized that there was a support here, and that this also brought, like, Broadcom is a household name as regards to, and I believe it also household name in AI, but more importantly, it gets a lot of traction because Nancy Pelosi and some other compadres probably have some insider information. So the market is really keen on trying to pick up on that. And there's some apps out there that actually track some of the biggest players in the markets and their plays, because a lot of them are forced to disclose their plays. And so this is one that Nancy Pelosi is eyeballing a lot. Um, this is kind of cool because it came down into the support zone. And what we did is we wanted to start adding this into our option repertoire, because not just because of that as alone, but Broadcom is going to be a leader in the AI space. Nancy's looking at it, it's got a nice pullback. And if you see that it has pretty juicy dividends, right? So they're paying out to people, and their cash on hand is actually pretty high. So when you look at their what they got, so you're talking about $10.99. Man, that's a lot of cash flow. And as that cash flow is pretty high, that's what the name of the game is. They recently did a 10-to-1 stock split, and if you know anything about the stock split, it doesn't necessarily change the value of the stock overall. There's no like arbitrage there, but what does tend to happen is if you have like a 10-to-1 stock split, 5-to-1 stock split, the stock does tend to rally over the course of at least a 12-month period, a considerable amount of the time. So after the stock split and the pullback, which is sweet, we wanted to go ahead and be a part of that. Whether or not, it just goes massively to all-time highs, we'll not know. But this pullback into the support zone seemed like a pretty fair location for us to kind of hop in. And so we decided to do that. So shouts out to AVGO. Another one I wanted to highlight, not necessarily make a play on, was USO. So USO, if you notice, right as seller stepped in the market, it pulled in here. You could probably have taken a kind of a play either here or here as it pulled in with a nice juicy little stop out right here, increase your risk to reward, and then here, well, bam, there's a seller, right? But you would not have known that sellers are stepping in even right here on the rally. And it also kind of helps you notice where big money actually steps in. They might step in, like, so it hits highs, and instead of taking the immediate high, right, they might wait for a pullback and a rally before they come in and short it. And so now okay, well, big money, or at least a higher than normal volume is shorting in this level. That is very powerful to know. I don't think really people understand that. So selling here, you can also see when this massive amount of sellers kind of get off sides, and buying steps in right there kind of at this level. So you can kind of see like, oh wow, if it breaks above this level, buyers do actually see that trap, something that you're not seeing because you're looking at a standard bar chart. You're just, most of the other candles are noise because it's not, there's nobody there, there's no real volume there, so it could just be machines trading against machines. But when people are making a decision, they really probably will throw weight behind that, and that's going to get them a little bit more emotional, get them a little bit more pliable when it comes to making a decision to hop in or hop out quickly. As you can see, the seller stepped in, and 1, 2, 3, they got, if you didn't get paid this day, and let's say 30% more sellers stepped in on this day, you're going to be more apt to let that position go, which spurs on buying, right? If you're selling to get the shares back, you have to buy them. Well, how does selling work, right? You're borrowing someone else's shares, selling them on the open market, right? Hoping that the price goes down, you can buy them back at a cheaper price and pocket the difference, right? So if you sold, right, in this candle right here, anywhere from 73.93 all the way down to 71 78, you are offsides, right? Once it breaks this level, and hence the spur of buying that happens on USL on this day. All these sellers were offsides. They probably let go of their position. Momentum kicked in and it carried it through the position. That is really, really powerful. I'm glad me and Q kind of developed that. I'm not sure if we're gonna sell that on the open market just yet. Or we're just gonna give it away. We don't really know yet, but we're gonna decide that and kind of let you guys know. So, same thing kind of happened here. You can see where sellers really stepped in, and buyers stepped in, but to no avail, and then a drop, right? So it's really beautiful for kind of catching that. Same thing here. I think we kind of recently went over that example. You can see sellers not getting paid for their efforts, and then you could almost say, okay, well, I'm gonna put in a play for 3 weeks and let's see what happens, and you would have gotten a little profit from that. Not much, but it definitely would have been, especially if you were selling contracts as opposed to buying. You would have made a nice juicy fee for that. And looking at some other plays kind of coming in here for we'll close this puppy down. Looking at some other plays that are here, we'll go in the slot first. There's quite a few, so we'll just pick out the cream de la creme. Let's see. Do we have anything? 30-minute squeeze here. GE's firing on the 30-minute squeeze. Yeah, it's pretty interesting, right? So nothing really of note here, other than the fact that there might be, as GE really has rallied over the past year, and it's kind of going bull flaggish. You could surmise that if it breaks this weekly candle here, there could be a buy trigger there, but at the same time it could be rotational. So seeing that it's rotational, I would want to see it come down to a level like this, and then throw like a volume candle or something like that. That would be ideal there. Boom. And then you have highs here, so mark that up right. There's GE for you. We also have Wells Fargo. So we actually are in Wells Fargo. Kind of got a buy trigger right here, looking to do what the same thing happened in GE. Just have it. The trend is strong up, or it is it is weak up, but it is still up. So we took that play, hoping that the trend would continue. The trend's your friend. Took some heat on it, and then it kind of rallied. So we're looking to see maybe a potential rally. And as you can see, the bounce kind of came in on increased volume. There's a lot of buying here on this support level. So let's say you are afraid to take a buy on a support level. Well, there you go. It's support level. This went green, meaning there was a higher volume than normal. And this was actually earnings too. So it spurred on more buying. So shout out to it and the system that we developed. Same thing here. Rally, sell here. The follow on next couple days for XOP have been a sell. So a shout out to the system again. And we just kind of comb the market for stuff like this to see how it plays out. We've just been watching it. Same thing here. Like after a huge sell off, you see a spur on of buying on greater volume. It means that you're not buying alone, and that's really the biggest thing. Do you want to be the only buyer when everyone else is selling? Do you want to be the only seller when everyone else is buying, or vice versa? If you see those guys get off sides, you know the psychology. They're gonna have to lift their positions. Intel, as it rallies, right, it kind of gets off sides right here. And there's been some selling, not an increased volume of selling, but there's been some selling there. What the heck? Close this out. Nothing really of note there. It's in a kind of strong downtrend, so would be looking for plays that push it to the downside there. Nothing of note there. EA or EOG, excuse me. Really rotational stuff. I know I have a trend line here for increased buying pressure, and so it's coming into a wedge. So this is definitely something you can watch for like what I talked about. So here, like buying here, maybe for 3 weeks and then seeing it rally, that'd be pretty sweet. Kind of at support and holding on for the ride there. If it pulls back into that level, it might be a good look. Doubt that it will, but if it does, we'll kind of know what's going on there. Um, Loving it. So you see stuff like this. This is pretty sweet, right? Um, we got SPY above a certain level, so let's go take a look at that. Right. This is exactly what I'm talking about right here. So as it sold off, this is higher than normal volume candle. Let's go take a look at SPY here as it buys. So we'll go ahead and put a oh, not SPY, XSP, which is a futures contract, and we'll go ahead and put a. We'll buy some chibis. We'll get some butterflies working. See if we can get some cheap four wide butterflies moving. Yeah, yeah, that's fine. That's fine. I was about to say, why is it so cheap? Okay. Yeah, on the day. So we'll run that. Cool. It got filled. So shout out to us. So that's kind of how we're gonna use that, right? We just put in a trade for the butterflies there. There's a pretty big rally here, and the reason why I felt pretty comfortable, we were already looking at that, and we might as well just go straight into the market and just have this weekly video and this day trading video be all in one. Might as well, right? Because of that candle. Now you can't see it here because it's a volume. Really, it's based on volume, but on SPY, it kind of makes sense, right? Because SPY is what actually has volume. So if you believe that this rally, right, found support and that sellers are off sides, it could rally against them on the day, at least into moving forward, right? Doesn't necessarily mean that it will like just jump up there, but you'll know very quickly, right? And with how cheap that option was, if you know anything about butterflies, the risk to reward is pretty good. So what you're doing with butterflies, if we go to what the heck, if we go to XSP and then we go to trade, what you're essentially doing is you're buying one call, or you're buying two calls, one closer into the money and one way out of the money, and then you're selling two calls. So how that benefits you, it benefits you in kind of a few ways. One, the risk to reward is extremely high. The risk to reward a lot of times is like 3 to 1 if it becomes profitable, because you're buying almost an out of money call for cheap. And I've got this 4 wide so that if it gets above 558, we will be this long call will be in the money, right? And then the 2 short calls, they will also be profitable because as theta decays, it's below those 2 short calls, so you'll be profiting on essentially 3 options. So you do kind of want it, this being the more expensive option, obviously, at the asking price of 48 cents, and then these 2 short calls being less expensive at 4 cents, but you have 2 of them, so really 8 cents, right? And then the way out of the money long call at 2 cents, you got 1 of them. So you kind of want it to be in this profit tent, and we can actually, I think we can analyze and show you that that's set up there. Oh, risk profile, there it is. Okay, cool. So we're gonna deselect all, and we're just gonna go to our play. Oops, not that play. This play. Cool. So that's kind of what it looks like, right? As you can see, like the price is, I believe here. Yeah,
yeah. If you look at the bottom of where my cursor is, price is at 556. So shout out to all my gun enthusiasts, but it's at 556. And what's so crazy is if it moves up the profit tent, you could see that the potential reward on this trade is like the maximum reward could be $350, but the total cost to the trade is was like $46. So for $46, if it expires right at the apex, which is 561, that would net you a crazy risk reward, right? And that's what we call getting pinned. But let's say it moved up there. The Scion line is what the value of it is currently, right? So let's say it continues to move up into the profit tent. You can close it out early for potentially $89 worth of profit. Now, if it continues to move to the apex, but where the Scion line is right now, you'd only get $120 worth of profit, which is still a crazy, amazing risk to reward, right? It's almost 3 to 1. So time is on your side, and distances on your side. So you're getting paid essentially 3 ways, and the risk to reward is minimal enough to where you're not worried about the trade. A lot of people say options are risky, but given certain setups, options aren't necessarily that risky, and you can put that play on, and for the price of a pair of shoes, potentially see a very nice risk to reward. Something I learned from some of my mentors, and that I really like, is just finding these asymmetrical setups and manipulating options so that you can get the most out of them, right? It might not necessarily be the best to be a buyer, but selling options in certain situations is a good thing, right? If you believe that, people are going to be off sides, and even if it's super volatile and it comes back down, as long as it's above that level, you can get paid out the full premium. That's really good stuff. So kind of same thing for the Qs. We can jump over to the Qs real quick. You could see here very, very increased selling pressure here. So if these guys start getting off sides, this could spur on a pretty juicy rally, right? And this is a nice support level here. So let's say you have a Harambe pattern that's setting up right on today, from Friday. This could be pretty aggressive buying into this support level over the next 2 weeks or week or so. If we go look at the intraday, right, kind of on that level, you're seeing selling coming in and engulfing red here, meaning that these 4 candles increase buying volume, and then it throws a nice juicy pullback for a buy. Right now, if we had professional tools, and that's one thing I want to tell you guys too, us taking a bunch of day trades without professional tools, even with the system that we were using, we were coming in mad late. Like, we were setting up positions like really behind. The speed is key. So like, even coming in here, if you set this up and it breaks above, by the time you execute that, it probably has already moved. So everything you're executing isn't, there's no way to get it at limit properly for like a vertical in the time span, right? And it just really takes away a lot of edge. And to mitigate that, we're gonna get the Ninja Trader system, and do it's more geared towards day trading than this. This has some day trader tools, right? It has some like volume profile here. We can zoom out a little bit. But it's not like, it's very crude, right? Not really manageable. It also has monkey bars, which allow you to put the volume. Monkey bars are putting the system profile over here, the volume profile over here, but not necessarily what we would be looking for as regards to that. So it's just how do you want to trade, right? You can also set up like quick keys up here, but the problem with that is the same thing. You're probably got like one contract, and you're not allowed to buy at limit for like right there at the money. You would almost have to purchase it, set like one strike, and buy that strike. I think that's just really crude and unusual punishment. So we're not going to do that to ourselves. We are just going to get the right tools, even though they are pretty juicy in price, and trade it that way. I know some guys they using this, they just set up to buy the shares at market, and that's cool too. Like you could just buy like 100 shares and keep it moving, and then put your limit order, and you could do it like that with the quick keys like that. But that's not what we want to do. We do like that leverage. We do like the options, and we want some other tools that they can't afford you. So and what tools would that be? Like the cumulative delta, and you can set up your volume profiles very more efficiently in that. So yeah, there is that. So we have some positions here. We kind of went over the in the slot plays. We're gonna go over some of the ones that have kind of thrown a sell trigger. And right here you can see that a oil futures, crude oil, light sweet crude has kind of definitely thrown a sell signal even from back there. You can see that it was kind of rotational, and then after it broke lows here, it went imbalanced. So I like the way this system is too. If you could see that sellers at the bottom of here kind of got extended and then they get off sides, that could be a position to make a play for a rotational rally. And kind of same thing, you can kind of see these sellers get off sides at a two standard deviations, buying steps in, at least a VWAP. Very high probability happens again and again and again. It's not until there's a clear break of the low that you start to go imbalanced. And you'll see it build market orders below that rotational level. Like right here, it starts building market orders below that, and then it kind of goes into a decline. So shouts out to CL. We'll also take a look at Novo on the weekly chart, of course. So Novo Nordisk, that's another thing too. With the system we're seeing here, we're going to see if there's buyers here and kind of get that more aggressive buy. We do believe it is in a strong uptrend, but with this, it'll help us improve our risk to reward. It is a little aggressive. We ideally would want it to be above the 8-pair moving average before we really sized in. So if you want a good, this is what I'm thinking. This is really good for a kind of a preliminary position, and then you add on when you get your full trigger. AMD, nothing really here. It is rotational, but I would want to see more as regards to your ability to buy, right? And this is again seeing this and constantly seeing where at the end of moves, kind of at support levels, you got increased selling pressure step in, and then as these guys get off sides, there might be some pullback, but you're almost seeing it like just take off to the upside. So and you get some exhaustion here, and then it returns. So when increased amount of buyers aren't getting paid, that could be a sign like, hey, if it gets offsides, that might be a good sign to let that thing go for it to return. Or same thing here, it kind of rallies. The increased number of buyers didn't get paid, they're offsides, and it dumps. So just something to keep in mind there. You want it, it's almost like a short squeeze, right? Same thing here, Amazon, right? Very, very beautiful pullback into, you going trending sideways for about 2 days, breaking that, and then rallying the next week or so, week or 2 weeks, I should say. And it's pretty aggressive, right? It's not above the 8. It's not even above this support level, but it does rally and rally hard. It does. So it's something to keep in mind. But as regards to a sell, yeah, definitely a sell trigger here for sure on this candle right here. Came in. We'll get rid of these because these are intro rotational levels, so you guys can see there's not so much clutter on the charts. But yeah, that should help. We'll break this down. So yeah, the trigger to sell on the weekly would be here. but on the daily, right, you're getting a what we call a death cross. When a death cross is when a slower moving average crosses a higher moving average. So in this case, this line here is the 8 peer moving average, and this line here, I believe, is a 21. Click on that. Yep, 8 and 21. There it is. So 8 peer moving average crossing the 21 peer moving average, and as the stock starts to push down, so really the sell candle, the trigger on the 8 is the trigger is below the 8 peer moving average and below the previous day if you're on the daily chart, and below the 8 peer moving average and below the previous week on the weekly chart. So let's say, for example, you were looking for a sell. Well, this is basically where you'd be selling from, kind of at the TV top. You almost look like a genius. The only problem is Amazon is in a somewhat of a weak uptrend currently, so I don't necessarily wouldn't want to be a seller in this environment. I'd be looking for potential buys, and that's how you kind of want to make your plays. The trend is your friend, so wait for plays that are in the direction of the overall move. Yeah, you can get some points here or there, where it rallies against them or short squeezes against them. But where's your edge at? Where's the where you can? Oh man, I kind of missed the perfect entry, but I kind of fell the right direction. It's almost like, do you want to get in the water upstream, or do you want to get in the water fighting current, or going with the current? And really, the trend is going with the current. Even if you jump in the water wrong, if you're going with the current, you're not going to necessarily be at that much detriment as if you jump in the water trying to go upstream. You're going to lose a lot of momentum, and you almost have to be perfect in jumping in to get what you need out of it. So we want to be with the current. The trend on the weekly is up, and so we'd be potentially looking for an uptrend, and hopefully that sets up here relatively soon. Right. But if you notice, like down here, that's kind of my case in point. When this pullback happened and you're looking for, let's say, an aggressive buy play, this candle got highlighted. And because it did, you could take a play here, and it rallied for like the next week. Actually, it rallied for almost a quarter. Buyer stepped in, seller stepped in, and then buyers overtook them, and it really rallied. So that's just something to think about. Like when we're looking for maybe sellers to get off sides, and then it kind of squeeze off of their selling pressure, kind of at the end of the move. It's already kind of gone down a big juicy amount. Sellers step in kind of at the end of this move, getting in late, higher than normal. That spurs on buying the other direction. I can't believe I'm putting this out for free. So I hope you guys are enjoying it. You can't say I never did anything for you, right? Microsoft is actually on the list too. Now, this is just basically saying, hey, the expansion contraction on the weekly is gone negative. And that is the case. The expansion contraction on the weekly is negative. So that's why it would trigger. This isn't a strong uptrend, but you would want to know the moment that your weekly expansion contraction goes negative. That is that's pretty handy to know. Like right here, even if it's not in the direction of the trend, you can start putting alerts like, okay, if you get above this 8 peer moving average, let me know for the rally, right? Or even worse, like, okay, it's on the play for negative, but it's strong up. Good. Bad news is good news. In this case, we want to be buyers here. On Microsoft, we believe in the company. So something like this, big selling, getting off sides, buying with it, that could be very aggressive. Same thing here. You would have got in here, probably stopped out, but this buy would have been juicy. This sell off sides would have been juicy. It's just something to note, and we kind of see it over and over and over again. So shout out to Mike Bellafury and One Good Trade. We're reading that and kind of adding in some of the principles of what stocks are in play, and being able to make a system that tells us what stocks are in play and what days, right? So as you can see, most of the days these stocks are just drudging along, and you really don't have a position yay or nay or a reasoning why, right? But there you go. So Microsoft pulling back and giving a nice Harami pattern here, and setting. Now this is Monday, so this candle is opening above the 8 period moving average. Not looking to throw any weight behind there as of yet, because this isn't necessarily a weekly or daily, or we don't have any volume candles to give us a separate setup. So we already went over Meta there, so you kind of should know. Shout out to Meta on this juicy little rally. See if it plays out. Lily, so yeah, selling, stepping in, and then really washing the stock to the downside, taking out multiple candles. This could be murder she wrote again. Expansion contraction definitely went red. Was it enough to push the 21 period moving average down? Well, I wouldn't say that, but it's a nice juicy pullback, and we'll see what happens with Eli Lilly, the pharmaceutical company. Yeah, so if you guys can see, I already marked this one up. So if like the Nasdaq can break above this candle, would be looking for aggressive longs. Aggressive doesn't mean step in with size. Aggressive really means the play hasn't had time to develop, so you're taking a very like, let me get in right now, a stance on it. So don't think just because I use the word aggressive that means size, like going with a massive size. Actually, it's the opposite. It's take a smaller position, and when you get your actual trigger, then scale in, right? Then scale in with your full position. But being able to, for some people, that could be a good thing, because if you get analysis paralysis, you don't want to get in. You could get in a small amount and have a tight stop, and you're like, okay, I'm making money here, cool. And if it moves in your direction, cool, you add on, you're like, okay, wonderful. And my normal spot, then so it just takes away that fear of missing out that a lot of people have. But again, you need to be a disciplined trader. You don't need to say, oh, well, I could cut costs here. Or, no, you need to use proper risk management, or have something at least that works for you. Okay, so full bear. This is interesting. There's not a lot on the full bear, but we do have something on the full bear. Energy. Knee. I used to trade knee a lot back in the day, like back here. Not so much anymore, but yeah, knee energy. So what can we say about knee energy? I mean, it basically would be I would need to see knee really push outside of the blocks there for it to be a buy, right? You would need to really push above this previous week high for me to think that it's going to give me a nice juicy risk to reward. The risk would be breaking of this weekly level here, and then the reward would be approaching pivot highs to potentially go at least just to pivot highs. It is currently in a pretty weak uptrend. Currently, it was in a strong uptrend. As pullback, now it's currently developing into a maybe a strong uptrend again, but currently in a weak uptrend. So, especially if it gets above this candle, these guys really haven't been rewarded, and probably some absorption going on here. So that could be a murder she wrote for these guys if it really pushes. Yeah, look to take that buy on knee, or at least know that it's happening. Nothing really here to say for MDLZ. Here it's in a strong downtrend, or excuse me, a weak. Yeah, it's strong downtrend. Recently pulled back a little bit, so we could potentially see a play to the downside, right? Yeah, there's that. Going against there. Yep, there it is. Okay, so would definitely necessarily be looking to have it. But on the daily chart, though, it does have a golden cross. So just be mindful there might be a reversal in the works. One of my favorites, Amazon. I don't really, other than the Harabi setting up, really don't have any plays on Amazon. I just, Amazon's one of my favorites. So let's see what we got as regards to full bear. COP. Look at that. In a week, in a strong downtrend actually, but the 21 period moving average is neutral. Kind of a more trickier setup, right? If you were going to look to trade this, buying pressure, trend's kind of broken. Some rotation. It's kind of rotational. Ideally, you'd want to hold this 108.88 level, with a hazard area of 105.73. Maybe. But the good news is here, unbalanced volume has recently gone green. That's good. So it's kind of anyone's ball game. But I would really want to see it push. Not I would want to see maybe something over here to give you an indication. Another sell into this level, maybe red, and then going against them. That'd be pretty sweet. Or even a green candle, like break a high here. That could be a potentially juicy position, right? But don't. What's really throwing me for a loop is this hammer, this morning star hammer right here, kind of thing. At the rally. So this basically this happening last week, going up, and then slamming back down. That does not give me a vote of confidence there. It just means that there's a spur of buying, and not too much follow through with that. So it's back kind of in this chop. SLB, here we go. Yeah, I can't really say too much. You got a green candle here, so let's say for example it again, not there's not really much to say here. Like you, ideally, it's in a overall a weekly downtrend. So I would want to be taking a setup to the downside. And you're kind of getting that here. This very wide kind of doji morning star up here. If it can break below that, you might have a play. But again, the risk to reward is almost like if you get right at the break of the low, the risk to reward from here to here and then from here to here is about the same, actually less. So your risk to reward is very, it's not that good, right? So if there's better plays out there, I would look for those plays. Maybe it breaks this and reapproach these lows, but yeah, that's a big maybe. We don't know, right? And it hasn't really respected this level a lot, right? This level was put in back here. It respected it here, then broke through it, making a hazard zone here, and then as it stepped, it respected it here, and then broke, right? So this level is kind of respected. We'll actually put that here as a yellow because it does respect that level there. Boom, right? Still kind of respect that level, and it's respected it a few times. It's just something to watch out for. It can pivot there, right? On the weekly. Yep, shout out to that play. Let's go. Yeah, let's go take a look at our ETFs here. So looking pretty good on the day so far for SPG. Oh, before we'll get to that in a second. So shout out to us in SPGI. I believe we have some shares of SPGI. I could be mistaken. We can go look real quick. No, we have shares of SCHD. Okay, so not SPGI, but we want shares of SPGI. Probably would have been a good juicy spot to get it right here, for sure. And then what else do we have? We do have some XLK. Don't like that, but yeah, it's not looking too bad today. Things are throwing a nice little Harami pattern in, but again, you're still in a downtrend. So you just got death crosses on the daily, but on the weekly, it's holding up for a strong uptrend. That could be good, right? This is overall we want to take the higher time frame, and the higher time frame says, hey, this is potentially a buy. Now, this week doesn't give you a trigger, but it doesn't necessarily give you an understanding that hey, it is respecting It is respecting kind of the pullback here, and there that's all you really got. XLY, strong uptrend. Shout out to Ed. SPG. This is the one we got. Um, looking pretty good. Looking pretty good. I'd say. If we zoom in here, you've got a strong moving average to the upside, or you have a moving average that's at least moving up, and price is making pushing two highs, right? But this resistance level here is going to be what kind of stops you, right? We'll put the red about highs here, bring that into the fold. There we go. I like to put that on there just so, like, if you're zoomed in, you could say, hey, this is the high of the highs, right? It's not just another weekly candle. It's not just another weekly level. This is the high. So, hazard, big hazard, big hazard there. And low of lows, too. The same thing as red. Did we cover XLY? Yeah, we did. Gas. Look at that. So yeah, we're right for gas. It's kind of that low, right? There it is. Man, gas has been having a rough year. Gas has been having a rough year. Where's red? There we go. Boom. But as you can see, like there's some selling that happened here at kind of the end of this move, and there was no buy trigger immediate on this one, but on this one, if you were going to be aggressive, there's a buy trigger there on the next day, and with a stop out at the low, right? It's kind of good for maybe setting up an aggressive 3-week play, that one that you want to size into. So this is the car company, the Chinese car company. We were looking at like some of the we really don't have any really fundamental data on this Chinese car company, but in the EV space, if the US is going to have an EV mandate, or Europe is going to want to go kind of expand their EV market, China does EVs the best. Not necessarily in materials, but price wise, like their EVs are like heads above everyone else, partly because they have all of the materials in their country for it. They don't have to really import much, and they have the auto know-how to build EVs. So even with the U.S. tariffs and without the U.S. market, you can see it is in a strong uptrend. And we kind of saw that, and we bought some shares here of this Chinese EV maker, right? Because yeah, it just kind of makes sense that most people, their ideology kind of goes out of the window when you get the right price. So I'm not I'm not anti-China or pro-China. I'm just, the car that this company can develop for the price that it can develop is pretty high. They've got a brand new EV that its base model is as cheap as like $9,700. So even with 100% tariff, right, you're still entering the market better than a lot of our used cars in the U.S. And if there's going to be we're still going EV, we're still making an EV shift, that could be a huge, could be one way to buy an EV, right? Instead of buying a $50,000, $60,000 brand new EV, you can buy a $18,000 brand new EV, be way more affordable and in some ways better. So yeah, and it's in a 10-day squeeze there. We put our alert here at kind of 32.25, just so we can track it, like when it's gonna get, if it gets to this resistance level, we probably could go rotational. So just something to think about there. Healthcare, kind of went over healthcare a little bit. As you can see, and this is kind of two case in point, right? This move, you seeing this, right? We even took a trade here, right? We took a negative trade, we took a sell side trade, and we covered here. Now, had we seen this, we would have known that these sellers 2 days ago were offsides and would have potentially taken a buy trade here on XLV, right? So this is really, really valuable stuff. Really valuable. Being able to have that insight into what's actually in play. Are there more players than normal? Are you going against the win, or are you going with the win? If all these guys, these increased amount of sellers are going against the win, right? Then buyers step in to confirm your position, to confirm your trade, it'll probably rally. And then you have a highlighted candle here for the exhaustion, right? Buyers step in, it goes to highs, boom. People start exiting their positions. Why? Because it's hot. And now these guys are offsides, right? So just seeing that is a revelation to us, especially on a daily for these longer moves. And I'm like, wow, like that is so cool, right? So cool. There. Corn. In a nice juicy downtrend, I would expect to see like a rally and then look to take the sell here because you are in a pretty aggressive downtrend for the corn market. I don't know why. Yeah, prices of things are pretty high. So you would think that if prices are high, you would flood or kind of put the onus on the market to get into that sector. So, but nope, not so much. Corn is dropping and dropping fast. Corn is dropping fast. Don't necessarily see any buys here. I would like the sell was here. You might be able to take a buy here, but you won't get paid too much because it's in a pretty sustained downtrend. The 21 period moving average, even moving through here, was down. So I would necessarily be wanting a sell setup on corn there, and you get it like on this day when it broke this low here, this really right here. So let me mark that out so you guys can know what I'm talking about. Right, so once this candle broke that low, that's your trigger to go ahead and take the trade there. Yeah, this day, nice. XLF. So XLF was one of our triumphs there, and shouts out to us on XLF. I think we did pretty good on that move. So got a buy trigger on the weekly, where the green arrow is, and because of that buy trigger, we're like, okay, we're gonna hold it for the next 3 weeks. But most importantly, what gave us the conviction to take the XLF trade was really our really the sectors and the individual stocks inside of the sector. So those stocks on XLF, here we go, boom, financials, boom. So all the stocks, if you notice, we have like a quick snapshot of the XLF market that we built, and you can go to ETF. You can go to ETFDB and do your market research on that, right? Type it in here. ETFDB, right? Boom. Go over that database. I'll pull it up for you guys. How you build this is pretty. Excellent. Sorry. Boom. Don't worry, I'm gonna let you guys see that. So how do you build this, right? This isn't really that hard to build, especially in being able to look at it. If you set up your flex grid, and there's plenty of tutorial videos. If you guys want me to make a tutorial video on that, I can. But there's plenty of videos on how to set up this kind of grid. You just kind of split screen and move things where you want it, and you'll have your charts to be able to see it. And then with these little tabs, you can make these like momentum and trend tabs. I just pulled these from Raggy Horner. Shout out to Simpler Trading. And so it gives you a nice juicy snapshot of the market. Like, hey, double greens, momentum is red, but the trend is kind of yellow, so on and so forth. And as you can see, it's a lot of green, right? A lot of double greens, a lot of double green, right? So when you think about, hey, these things are all kind of in unison, flattening out, or green. There's going to be a potential like that the probability of all the tails being green, the dog's going to definitely wag green. So the buy there was actually pretty straightforward, and how you find out which stocks are to put in here is pretty easy, right? You just come over to ETFDB, so where you can do some ETF research in their holdings tab, and you can see a lot of the names that we have over there, right? All the names like Berkshire, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo. They're kind of all there. SPGI, they're there. So when you see those companies, and we can go back over there real quick, you see those companies over there, you could it's a snapshot, right? Instead of just having a list here, you can say, okay, do I want to take a trade? Do I want to take a buy on XLF? Yes, I do. Okay, boom. Because a lot of most of the sector inside of the ATF is green. So in a move like that, do I want to pick one individual stock and say maybe just to hit that week, or with the movement of the ETF, do I just rather just do the safer bet and take the ETF? So we just went with the ETF. It worked out really, really well. And shout out to the mentors there for giving us the kind of that knowledge to be able to make those kind of decisions for that. So shouts out to that. And it has since pulled back since then. But for us, it was all we needed to kind of make a play there. And we did just that. See these green candle? I think these are all green. Yeah, that's great. Green candle, green candle, green candle. After that, we started seeing it kind of pull back a little bit, so we went on and let her go. So that's kind of the point, it helps you identify where extreme buying stepping in, where exhaustion is. That's why we kind of added it. We wanted like a visual of that, and yeah, it's been helping out so far. We bought back here a little bit on the rally, so you see the trigger was above the 8-pair moving average and above the previous week. It did that, immediately pulled back, so it is what it is. You could have bought on the week before that as well. Probably would have been the same spot. Pullback was pretty drastic though. Almost giving us a stop out. See, we had our stop right there. But kind of squeezed in here and then fired to the upside. So shout out to XLF and fundamentals kind of working out in our favor and pulling it at the right time too. Shy of 3 ATR. Ideally the optimum to do is if you think it's going to pull back, just keep your up position and then hedge, and then you would look like a genius, like, oh yeah, I bought here and then I hedged here, so I'm still in the up play and I'm still I'm making money on the downside to offset that, right? But you still have your up play in there. So yeah, it was I think a $400 play on that move. It was really nice. So yeah, I think that's all we have for you guys today. If you guys have been liking what you've been seeing in our videos, all the knowledge that we received from the books and that we're bringing into the fold, the new thing that we developed, guys, go ahead and hit a like, comment, and subscribe, or watch some of our previous videos where we kind of shouted out the XLF to you guys and even broke down the ETFs in there. We might even actually put that video in the link in the description or somewhere on the side of your screen. So if you guys been liking that, hey, show me some love and tap back in and join us for some more fun on the charts. This is your boy MC Fire. Thank you again. Have a good day and goodbye.